everyone and welcome on xprim.tv. We have the pleasure of having as our guest today Mr. Kamal TABAJA, who is Chief Operating Officer of Trusttree, and he will guide us into the depths of this international reinsurance company. So, first of all, Mr. TABAJA, I want to ask you, for a business that has been traditionally dominated by European or American companies, how has Trusttree been able to develop in these 25 years?
Well, first, thank you for the opportunity to present Trusttree and the team to the markets that we are operating in at this stage. If we go back just briefly with Trusttree, as you mentioned, most markets were dominated by the big 5 or big 6 international reinsurers, to say. Trusttree in the past started obviously as more of an oil and gas captive, concentrating on what was to be the dominating trade in this region, in the GCC region mainly, and parts of North Africa. Subsequently, we have seen the opportunities within the company, and the shareholders wanted to develop beyond their existing remit. And it's all down to basically culture and value within the companies. We were successful in developing the additional lines of business, such as the treaty, the facultative lines of business in the Middle East, and the Trusttree brand started gaining track. As you build up, normally you have to follow through with what the rest of the successful reinsurers have done over the years. Number one is you have to have a good foundation, internal foundation, and that is based on culture, on values, and on the technical expertise of the underwriters and the team, and there has to be a vision. If you don't have a vision, I don't think you can get anywhere. So having a vision and consequently putting a plan together and a strategy to implement and to get to that vision, which is for us has been the reinsurer of choice, that would be the main ingredients to do it. I have to say maybe the first milestone was to venture into new territories, to start testing the waters in new territories. We're a small company, small capital base, so we went beyond the GCC and parts of the Middle East. So we went into parts of North Africa, such as Tunisia, Egypt. We went into Turkey and started venturing into the Far East in Asia. And obviously we opened up, the first office for us was in 2004. Our customers' attention, immediate attention, obviously is what value can you bring to us? And everybody asks that. Even if you get a customer at your, a salesman on your doorstep, you're gonna say, what's the additional value you're bringing to me with your product? The additional value that we have always been talking about, number one is we were a long-term player in the markets. We don't come in and come out, and this has been tested in the Turkish market. When everybody or some of the big players left Turkey, Trusttree remained and actually used pretty much all its capacity to support its Turkish clients. In the Far East, it was the same thing. We stuck with our clients despite all the cat events that have happened. We had a niche product, which is the energy, which not a lot of players had, which customers obviously respected as well. Number two is we were quick in turnaround. We were close to our customers. And this we have been doing even in new markets right now. We're constantly visiting the markets, showing the capabilities, talking to people, understanding their needs, trying to develop our products on that basis and develop our capacity. And the client for us has always been, before anything. We always, when we look at our retro program, when we look at our strategy, when we look about our vision, we always take into account is what do we do with our clients? What are our clients looking for? And that's been the main edge for us. We're not a big capital company. We're not situated everywhere, but we do have niche values, culture, technical expertise in the areas that we know and that we work in. We know it very well. We go on the ground, we live with the people, we live with the clients, and we are able to deliver on the promises that we make to them.
I see. But at the moment, you are still based in Bahrain, but you have branches in Cyprus and Malaysia.
Yeah.
Why the need to develop these branches? Why in those countries have you been following up on your clients, or what was the reasoning behind everything?
I mean, if we go back to 2004, that was the start. We have a strategy. Is when we move into a new territory, we need to learn a lot more about it. We need to develop a certain level of income and sound understanding of the underwriting and the strategies and the client's needs, and whether there's a room for Trust 3 to develop into that region. Once that is established, we do realize that we need to be closer to our clients, because obviously your client is coming back to you with more requests. You need to go see the risks. You need to go visit, be in the market all the time. And we are a true believer that the people that are able to communicate and conduct the business are the people from the region itself. And hence, you need to have people from the different countries, from the different culture that carry on the values and bring them into trust to add to the existing values that we have currently. So we opened up the office in KL, in Kuala Lumpur, back with the Labuan license in 2004. And that's mainly because we had substantial growth happening in parts of Korea and Taiwan and Philippines and Indonesia. So we needed to have local presence closer to the clients. Same thing in Cyprus. We chose in Cyprus because we had a license there. We believe Cyprus is close enough to most of the countries. Now it's handling Central Eastern Europe with the CIS, and we are going to grow the branch by mid next year. We should have a fully pledged underwriting office on multiple lines of business. So we already have treaty business being underwritten from that office. We already have a property underwriter there. We will have another underwriter moving. We will have engineering moving to there as well. We have opened up an office now in Casablanca, Arab office. Africa now represents close to 14% of our overall premium. So we need to have an office or two going forward to be able to service the market properly, the local presence.
Are you focusing on a particular area?
In terms of products, you mean?
In terms of products and especially in terms of underwriting?
In terms of products, we tend to general lines of business and specialized lines of business. All markets normally need certain general lines of business, which includes obviously reinsurance. We are a reinsurer, so the treaty, and which comes along with claims handling, etc. And then you have the more frequent type of business, the commercial business, so such as the property and the construction. And those, we believe that these three elements need to be present in any office that we open or we develop as an underwriting branch. Okay, and then we have the specialty lines of business. If we believe that there is enough volume of business that commands having an underwriter for that special lines of business, that we would move, such as oil and gas or the liability or the terrorism or political violence, then we do put another underwriter for that. So now, for example, in Asia, we are already going to have a life underwriter, and we're going to have a liability underwriter, because we believe the market is big enough for us. We have been able to to tap into those lines of business now, and we believe we need to have localized expertise to run that business. On the underwriting side, the closer you get to your markets, the better you understand. And the better you adjust your models, you adjust your underwriting capabilities to that specific market, you will be able to make more tailored made products as well for the clients, and to deliver, because that's what we are for. There is no use of sitting outside a region and saying, I want to be a player into that region, but yet you're not doing anything locally. People expect you to come back and invest into their territories, and that's what everybody should be doing, is not only about producing the premium from those regions, how do you reinvest into the quality of people, into the development of the local people, and the knowledge and the know-how of the local people. And this is one of the key strengths of Trust 3, that we have been very transparent, we have very encouraging in terms of driving the knowledge base and the enhancement of the knowledge base in insurance into the local markets by training, by business partner seminars, by inviting people over here, by exchanging knowledge, and we're proud of doing it.
And is this geographical approach and this strategy mainly responsible for the increase in gross written premiums that you had last year?
Definitely. I mean, this is one of the main, as I said, if you look at Africa today, 14% of Trust 3's premium being from Africa is not a small number. And we're talking here is excluding South Africa, which is the biggest market. Reinsurance premium that comes out of the continent is from South Africa. And we don't do much business there. So sub-Saharan business, from being close to clients, because we've been traveling to Africa, say, since 2004. I started traveling there, and now there's 2 or 3 teams that go there. But the clients have seen approve of consistency, approve of offering of products, and a consistency of delivering on the promises in terms of training. And hence, when people see that there is a commitment, a long-term commitment to these territories, clients obviously will be happy to share the business with you because they believe you are a partner into their business. You're not simply a reinsurer. You're not a capacity provider. And this is what we try to communicate internally here and to our clients, that look, anybody can provide capacity. There's a lot of capacity in the market, but it's the ability to give solutions. We are here to solution providers. We're here to underwrite solutions for you. We're not here to provide you with capacity. And that is the main message that we convey to the underwriters internally and to our clients externally.
But what is your capacity? Because you mentioned that term.
I mean, it varies. If we're looking at reinsurance treaty business, we're looking about $10 million at an average. If we look at the facultative business, which we have a diverse product offering, that would include, so if we look at the oil and gas, we can go up to $110 million. Property is close to $90 million. Construction is the same, but $90 million.
Do you use retro?
We have, obviously we have retro protection, and we do use, facultative reinsurance when we believe we need it in the market. And then we have, the specialty lines like the PV, the marine, the liability, about $15 million in terms of business.
But how have the recent changes in the global energy market influenced your activity? Because you mentioned that at your core, you are basically an oil and gas reinsurer. This is how you started. We have been, but we've slowly started to diverse away from the energy and oil and gas line of business. It's still a big proportion of our premium if you look at it from a single product or line offering. But we have started growing the other lines of business. We're pushing into growing them further. Not because oil and gas business is not good, but because it is a volatile type of business. It is a capital intensive business. And it's not in the current region that we're at. We believe we have already reached a level where Trust 3 is one of the major players. And actually it accounts on the oil and gas about 17% market share of between Africa, Asia, Russia, and CIS in terms of premium available on the oil and gas. Trust 3 already underwrites about 17% of that, which is a big market share for us. The global energy market, you need to look at it you need to segment it. Because it's a very complicated, you can talk about the oil and gas prices, which is obviously affects the private oil companies more than the national oil companies. So if we look at the private oil companies, we have seen that they have cut down their capex, which has affected obviously some of the projects. Some projects have already been committed, they've already been funded, and there is still a commercial viability, especially in regions where there's a high demand for oil and gas, so they can sell it
at the market. So there's no need for them to pay a lot on exports. They have to take to other, they can sell it in the local market, in the domestic market. So these projects are still going. Assuming that things don't get worse in the next 12 to 18 months, I think those projects will be maintained. So there's no problem. Newer projects that were being under feasibility study, I think some of those have been either shelved or they have been delayed, postponed for production. Because some of them have been completed, but they have postponed the production of them, like Australian LNG. We've heard about the Kashgan field now being postponed from 2016 to 2017. The National Caspian Oil Company, Shell, Chevron, CNOOC even, they've all have had some cut down on the capex. But if we look at the national oil companies, which is considered as a big part of the local GDPs, which in turn funds a lot of the infrastructure projects that the governments do. I don't think at this stage they will be, it will have a lot of effect on them. It has an effect on the budget, but they're not going to stop because they cannot afford to stop. What it has affected is the construction business. So we have seen now that there might be a slow, and if the oil prices don't go back above the 65 level, surely some governments will start cutting down the capex on the infrastructure projects that they had planned, because all of them have budgeted on 75 and above or 80, including offshore construction projects. Those will be cut down because that's quite capital intensive, and it needs, most of the time, it does need access to private banks. And the oil and gas market, normally when you look at loans they get or from banks, it's normally leveraged against oil prices, which is not existent right now. So they have to cut down back. For us, we've been very lucky as Trusttree in the areas that we operate in. So far, we haven't seen a big effect on our book. We saw something in the first quarter, mainly on the offshore construction, which we expect that this year it will be slow. It will be slow.
Does the same trend applies to renewable energy projects?
Actually, renewable energy has picked up a lot of steam back. From early 2014 and now, we are seeing a lot of growth into renewable energy. I remember back in 2009, I did a paper on renewable energy for the FCII at that time. It was the talk of the town. Everybody is talking about renewable energy, how glorious is it going to be, etc., etc. But there was a lot of hurdles, obstacles for renewable energy implementation. You need a lot of regulation change. You need confidence of investors to come in. You need to be able to sell the electricity. There's nat cat exposures along with the renewable energy. I think over the past 6 years or 5 years, especially in emerging markets, I'm talking about Africa, Asia, parts of Russia, Turkey. Some of this stuff has been meant. Western Europe has always had development in renewable energy, although it's been accelerated in the past 10 years. So what we are seeing now is that governments are taking action. They've amended the regulations. They have provided confidence to a lot of investors to come in because they're able to sell their electricity on the grid and get paid for it in exchange for with tariffications. So we're seeing a lot of growth in Asia, Pakistan, and Turkey. There's a lot of it. And I like to use the term alternative energy rather than renewable energy, because today, if you say renewable energy, people's mind only goes to wind and solar, which is a big proportion. But we should not forget that there is, for example, hydropower, where it's underutilized. Especially in emerging or third world countries, where it could be a substantial assistance, even better than it is. It can be capital intensive, but there are the resources to do it. And investors are more confident to get into it. We look at nuclear energy, for example. Nuclear power now is becoming, again, a lot of talk about it. Saudi has signed a deal. Egypt has signed it. Even here in the Middle East, alternative energy other than hydro. Obviously, there is no hydro much in GCC especially. But solar, wind, and nuclear is all on the tables of everybody. currently, and government decision makers. They are taking real steps now towards using alternative energy markets.
And basically what you're saying is that you're taking the know-how from the local market regarding alternative energy and bringing it to different other areas, such as Malaysia, Central and Eastern Europe, Africa.
We have been underwriting alternative energies and renewable energies since 2010. So it's 5 years so far, almost 5 years. We are considered one of the main players in the markets in our region currently. We have with good capacity as well. We quote and lead. We have most of the book is still driven by Asia, by Southeast Asian countries and North Asian countries. We see a lot from Turkey, but with all this experience, as you said, and the wealth of experience that we have gained in the past 4 years, now we are deploying, like in Morocco and in Egypt soon. In Jordan now they're building solar power plants where we have quoted and we are participating in that business. Sub-Saharan Africa as well, they are considering more solar and wind as well. So yes, I think we, unlike the oil and gas where we possibly, even the Trust 3 started underwriting this business back in 1989 or 1990, but the oil and gas has been here since 1950s. Okay, so it's a bit late. So back in 2009 we have taken the decision is, look, this market, the renewable energy, is going to be the new source of energy or alternative sources of energy that will be developing quite quickly. And we need to be in place before anybody else in this issue. And we have done it. We are one of the accomplished players in the market now on renewable energy. We don't offer all the renewable energy products, okay, like the Swiss or the Munich, but I'd say 80% of the covers we do offer. Again, on the nuclear, there is no nuclear yet in the Middle East, but it's coming. And we have already established a capacity on nuclear energy right now. So we do have nuclear energy, or nuclear power energy, including contamination, cleanup and costs of a product ready to offer.
Very interesting, but then why the need for a life and health department? A new one launched late last year.
Look, the more you become a player in the market, you need to offer all lines of business, or at least most of the conventional lines of business, because the client expects you to, as you ask for more business or you become a bigger partner into their business, you need to be able to offer them alternatives. You need to be offering them what possibly your competitors are offering. To become fixed on their panels, to become fixed into their strategy, not just their panels, even the strategy going forward. And I think this is the drive. It is a developing market as well, especially in the Middle East. Life and health and medical is a big market right now. It's a big growing market because of the regulatory changes, because of the privatizations of these sectors. And I think Trust 3 is well positioned to have a good share of that market. Going forward, with the assistance, obviously, of the international players and follow markets as well.
But what other trends do you see regarding the industry? You have access in various parts of the world. What are the different trends at the moment?
In terms of the life and health, you mean?
In terms of products in general, business trends.
So the markets now are heading more towards regionalization. Okay, so we're seeing markets becoming more regionalized than before. Even Lloyd's now is no longer, say, London-centric. Okay, they've always been London-centric, and big part, let's say, for say Western European kind of North American market, they will remain. Lloyd's is a big market player in there. But if we look today at the rest of the world, we're seeing hubs are being developed. Lloyd's is, through their strategy going forward for the 2025 strategy, they are going to regionalize. They've already done it in Singapore. They've done it in parts of South America and Brazil. Now Dubai, DIFC is, more syndicates are moving down to DIFC to access the Middle East or MENA business, let's say. And South Africa has already been a hub, but not a complete hub. I think it will be, along with possibly Eastern African coast, where I think Lloyd's will be doing a tour very soon as well into East Africa for the same reason. Casablanca now is doing a CFC, Casablanca Financial Center, which probably will be for the Francophone speaking countries as well. And we will see this gradually developing. So every market now has its own kind of differentials. It has its own requirements, its own needs. If we look at the Middle East here, it's probably one of the most growing territories in insurance premium. This is mainly because of the large infrastructure projects that have been happening. It's a growing segment in the middle, the middle wage segment has grown substantially in this part of the world, and hence the spending power has grown. So the regulators and the governments have taken more steps into privatization, into compulsory medical insurance. Takaful has helped into the life in the medical sector. But if we look at when we compare this to Eastern Europe, for example, where there's been a lot of stagnation in terms of the economy.
And a lot of natural catastrophes too.
A lot of natural catastrophes as well. If we look at Asia, again, it's two parts. There's the bigger economies where there's been a bit slower. There's the smaller economies where they're underdeveloped, and now they're being developed. If we look at Indonesia, we look at Vietnam, we look at Brunei, Malaysia, we're still seeing substantial growth, and there's a lot of plans for them in the next 10 to 15 years where we'll see a lot of growth into that.
And as a final question, where do you see Trust Re in the next 25 years?
Our vision is to be the reinsurer of choice. The reinsurer of choice can be put into different perspectives. We don't have to be the biggest reinsurer, certainly. And I don't think, I hope we can, and we will work to be one of the biggest reinsurers worldwide, but this is not what we are focused on. What we are focused on is to be the reinsurer the clients who look for into their strategy, into their success stories, like we had a success story. In the next 25 years, we do see Trust Re being present globally, definitely. We'll have a global presence in all the continents. We will have a diverse product offering. We will have some of the best trained staff and one of the best schools to be trained in before you get into the possibly move into other companies or so on. And we are seeing this right now.
Which school is that?
What do you mean? No, I'm talking about Trust Re being a good school of training in terms of training underwriters and having underwriting graduates from Trust Re. We have a very good, we will be surely the best in what we do in terms of systems, in terms of market approach. And the most important part is the 25 years. When you look back, you can say Trust Re has maintained its culture, its values, and has lived up to its promises of what it intends to do in the next 25 years.
Well put. Thank you, Kamal, for sharing your views upon the development of the reinsurance industry and of Trust Re, of course.
More than welcome. Thank you.